pleasant day to the young learners. I'm Dr. Shobha, Principal, Associate Professor and Head of the Department of Corporate Secretaryship, K.C.S.Kasi Nadar College of Arts and Science, here to lecture on income tax law and practice. So, you may find me at my YouTube channel, Smart Learning with Dr. Shobha. Today we would be seeing the computation of taxable income. So we've already seen how to find the total income. Now it is going to be the taxable income. So taxable income is nothing but gross total income minus all deductions, exemptions allowed from the income. That is the total taxable income. So this formula you have in mind, you can easily get into the question. So here we have various heads of income. So first we are going to identify each head of income, the income that is earned. So under salary, part-time salary is 1,64,000, and from that it is known that we should give a standard deduction. So standard deduction, a maximum of 50,000. So 50,000 standard deduction. So we get 1,14,000 as salary income. Then going on to house property income, annual rental value is there, which is 18,000, less municipal taxes that has been given, 1,500 per annum. So our net annual value is 16,500 after subtracting the municipal taxes. And from the net annual value, we give deductions under section 24. So under section 24, standard deduction is given at 30% of net annual value. 30% of NAV in this case is 30% of 16,500, which is 4,950. So after subtracting your standard deduction, we get income from house property as 11,550. Professional income has been computed and it's given to you 5 lakh. So now the long-term capital gain is also given to you 10,000. Other source income, that is interest from government securities, which is 29,000. So now the total income is 6,64,550. Now going on to the deductions, we have deduction under section 80C. The question says he has deposited 15,000 in public provident fund account. So now going on to the deduction under section 80C, we have the amount deposited in PPF 15,000. Next, he has paid rent. So deduction under section 80GG. So when you go for deduction under section 80GG, rent is 18,000 per annum. So that is for the house property income. Rent paid at Kanpur is 6,000 per month. So bearing that in mind, the statutory limit for 80GG is 5,000 per month. So 60,000. Rent paid minus 10% of adjusted GTI. So the gross total income minus long-term capital gain, that is 10,000, and deduction under 80C, all deductions to be subtracted. So 6,64,550 minus 15,000 minus 10,000. So adjusted gross total income is 6,39,550. Now 10% of that is 63,955. Rent paid is 6,000 into 12, 72,000. So rent paid minus 10% of adjusted gross total income comes to 8,045. So a recap of the question. So this is what he has paid as rent at Kanpur. Now 25% of adjusted gross total income, 25% of 6,64,550 minus 15 minus 10. So it is 25% of 6,39,550. So 25% of that is 1,59,888. So among these three, 60,000, 8,045. 1,59,888, whichever is less, 8,045 is given as a deduction. So ATC deduction 15,000, ATGG deduction 8,045. So both together, your deduction under section 80 is 23,045. Our gross total income was 6,64,550 minus deduction under section 80, that is in this case ATC and ATGG together. So your final income comes to 6,41,505, which is rounded off to the next 10 rupees, which is 6,41,510. So this is for your computation of taxable income, where you will be considering the total of all 5 heads of income less deductions under section 80, that is from ATC till ATU. So this is how the taxable income is calculated. So thank you, and if you have any queries, you may refer to my YouTube channel, Smart Learning with Dr. Shobha Edward. Thank you again.